Beyond the bottom line, unveiling the Statement of Comprehensive Income. The Statement of Comprehensive Income. It might sound intimidating, but bear with me. This financial statement is your window into a company's overall profitability. It goes beyond the traditional income statement. Think of it as a bigger, more detailed picture of a company's financial performance. Now you might be wondering, how is it different from the regular income statement? Well, the income statement focuses on the day-to-day operations of a company. It shows revenues and expenses. Think of it as a snapshot of the company's performance over a period. The Statement of Comprehensive Income, on the other hand, takes a long-term view. It includes not just the regular income but also other gains and losses that might not be reflected in the income statement. These are gains and losses that haven't been realized yet. Think of it this way: the income statement is like checking your wallet after a day of shopping. The Statement of Comprehensive Income is like checking your entire financial portfolio, including investments and assets, to see how your wealth has changed. Two sides of the same coin: net income and other comprehensive income. The Statement of Comprehensive Income is divided into two main parts: net income and other comprehensive income, or OCI. Let's break these down further. Net income is what you're probably used to seeing on a regular income statement. It's the profit a company makes after deducting all its expenses from its revenues. It's the bottom line that tells you how much money a company made or lost during a specific period. Other comprehensive income, or OCI, is where things get interesting. This section captures gains and losses that are not included in net income. These are unrealized gains and losses, meaning they haven't been cashed in yet. Imagine you own stock in a company and the stock price goes up. This increase in value is a gain, but you haven't actually sold the stock yet. This unrealized gain would be reported under OCI. It's important to track because it affects the overall value of your investment. Decoding the impact, how OCI affects your investments. Why should you care about OCI? Because it directly impacts the value of your investments. When a company's OCI increases, it means its overall value is growing, even if those gains haven't been realized yet. For example, let's say a company owns a building, and the value of that building increases significantly. This unrealized gain would be reported under OCI, boosting the company's overall value. As an investor, this is good news for you, as it increases the value of your investment in the company. However, it's important to remember that OCI can also reflect losses. If the value of that building were to decrease, it would be reported as an unrealized loss under OCI, negatively impacting the company's overall value. Understanding OCI helps you look beyond the immediate profits and losses. It provides a clearer picture of a company's long-term financial health. Section 4. The bigger picture. Why understanding comprehensive income is crucial. The Statement of Comprehensive Income provides invaluable insights into a company's financial health. By considering both net income and other comprehensive income, investors and analysts get a more complete picture of a company's performance. Think of it this way: focusing solely on net income is like looking at a single piece of a puzzle. You're missing the bigger picture. The Statement of Comprehensive Income puts all the pieces together. This comprehensive view is especially important for long-term investors. It allows you to assess a company's ability to generate sustainable profits. It helps you understand how external factors like fluctuations in currency exchange rates or changes in the market value of investments can impact a company's financial position. Section 5. Connecting the dots, real-life examples of comprehensive income in action. Let's look at some real-life examples to understand how the Statement of Comprehensive Income works in practice. Imagine you're considering investing in a company that manufactures smartphones. The company's income statement shows strong profits from phone sales. However, looking at their Statement of Comprehensive Income, you notice a significant unrealized loss due to a decline in the value of their foreign investments. This additional information might make you reconsider your investment. Another example could be a company that owns a lot of real estate. Their income statement may show stable rental income. However, their Statement of Comprehensive Income reveals significant unrealized gains due to an increase in property values. This additional data provides a more accurate picture of the company's overall financial strength. These examples highlight the importance of looking beyond the traditional income statement. The Statement of Comprehensive Income provides a more holistic view of a company's financial performance, considering both realized and unrealized gains and losses. Section 6. Your Journey to Financial Wellness, the Power of Knowledge. The world of finance can seem complex, but understanding the basics, like the Statement of Comprehensive Income, empowers you to make informed decisions about your money. Remember, knowledge is power. Don't be afraid to ask questions and seek guidance from financial advisors. The more you understand about financial statements, the better equipped you'll be to navigate the world of investing and secure your financial future. Remember, your financial well-being is a journey, not a destination. Take it one step at a time and never stop learning.